I look at it as this is part of breaking right now in this rest of the world. This is part of, to me, is going to be the Great Recession. It's kicking in this year. I'm calling 2022 the Great Reversion, and I view this as very similar to 1929.
In today's video, Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence, discusses the Federal Reserve's rate hikes and how markets are reacting to Fed decisions moving forward. McGlone shares his thoughts about the U.S. dollar continues rising and what is happening in energy, commodity and crypto markets. He believes that markets are beginning to crack and this will be very similar to 1929. Before listening to him, please ensure to smash the like button and subscribe to the channel. Let's dive into his last interview now.
The trend is clearly from the upper left to the lower right, as Dennis Gartman used to say. It's just going down. And then let's look at the key reason why. I've been a perpetual dollar bull, if people have called me, because the one thing you will look at is the number one thing that really is a factor shows maybe a leading indicator factor for the dollar is if you look at U.S. equities divided by the world ex-U.S. equities, that trend is linear relationship up with the dollar. And not only that, it's just reflective of where do you want to put your money. Strongest political system, very much flawed, but what do we do versus the rest of the world, particularly in China and Europe, and China and Russia, is we beat ourselves up and we come to conclusions. Highest interest rates, it's unstoppable when you measure, and then people talk about debt to GDP. I mean, if you look at Japan lately, I mean, but it's just, it's what Churchill says about democracies when you look at the dollar. It's just the worst of all except for all the other ones. And the key thing I like to point out is we will at some point get a dollar correction, but typically the dollar never goes down unless it goes up a lot first. It just retraces. That's the same thing with crude oil. Crude oil never goes up unless it goes down a lot first and retraces. That's just what I call the enduring bull market for the dollar, enduring bear market for crude oil. And we'll dig into that later. But to me, that's where I look at right now. It's unstoppable right now until you see the lose-lose situation of U.S. stock market going down, which is part of my lose-lose for the U.S. stock market, because everything's starting to break, just not the big stuff. It's broken in cryptos. We've seen that. Now, that's good because cryptos are top leading indicator. But when people get bearish the dollar, I'll leave you with this. I always like to point out the bottom line, the stuff that you and I see the most is what's the most widely traded cryptos on the planet? They're crypto dollars, dollar tokens. And that happened organically. And this is the key thing that we pointed out 2 years ago. The U.S., unless we're stupid, is not going to mess this up. This bastion of free market capitalism, cryptos, blockchain, all that silly stuff with how people want to just call it, but that whole infrastructure, which is only a little bit less than $1 trillion, went for the dollar as the number one traded asset. And that to me is quite profound for where the world wants to go. It doesn't want the yuan, the euro, the yen. My lesson I've learned, having lost a lot of money markets, is focus on the force. And the force is quite simple. It's political. Currencies will always be political, always will be, and always have been. That's part of how Bitcoin came about. This is part of, almost touched on in the Bitcoin white paper, and it's how politicians will always print more money. Governments will always print more money to help solve their current domestic problems. There's a big problem in the UK. They're going to throw more money on it. They're going to create more inflation for them. But again, it's an island. Yeah. The U.S. is basically a continent. And it's a small island, and it's also making people realize some of the key mistakes they made in Europe, like restricting fracking and horizontal drilling, and focusing too much on cutting out nuclear. And this is just poor decisions accelerating, and it's accelerating. The cool thing I love about free trading of currencies, it's the currency vigilantes. You pound that currency. Because it's showing that the global market does not agree with your policies, at least in the short term. Now, I don't see what ends this trend. I'm sure it's going to bounce in the short term, but right now it doesn't look too good. And it's just how you're measuring the pound versus the dollar. Dollar is another fiat currency. Something is breaking. FX is a start. We're just waiting for something to break. It will happen, maybe a significant emerging market defaulting on their debt. But this is usually how it happens. When you see the yen up 20% in 1 year, the euro 15% down in one year, the dollar index up 15% in 1 year, that's breaking the world economy. That's your global depression. And I didn't say recession. We're tilting towards it. It's just a matter of time until something breaks, until something gives up and they have to provide liquidity. But It's happening in real time. The point is, the difference compared to the last time we spoke in early in the years, no one agreed with it. Now the world's starting to agree. Okay, sell every rally I can in the stock market because we all know we're heading to recession globally. We all know what's happening in China. They're plunging. They have a property crisis that's much worse than ours was in 2008. People are blaming it on COVID. I mean, that's the mask. To me, this is part of getting into, this is stuff breaking. But the key thing I want to point out is, having worked at primary dealers all my career, is the Fed virtually never discusses the dollar at their meetings. That's what I've got from my Fed watchers. That's not a key. It's not part of their mandate. Dollar's just something to watch. But if it makes something break, they'll watch it. If the global economy is collapsing and it's going to make the demand for kick in deflationary trends, which I fully expect, then they'll notice. But right now they're jawboning, and they're doing a good job of it. The key thing I miss was when Chairman Powell earlier in the year said, "Oh, we're going meeting by meeting." This was like May or June, and we had that big short covering rally. That was good because we flushed out those shorts and we got the last of the dip buyers to come in. But it's bad because he shouldn't have said that. And then he's been spending the time walking it back. That's not a big deal, but it just triggered the market's need to go up. And that's the key thing to mention, is the whole tide is going out now. Even bonds collapsing. The only part of this sector that really did well, this is commodities, and commodities are the most mean reverting assets, and they're going to collapse too. And when you're a guy like me who's completely independent, and that's one thing I love, having been buy side and sell side, being at Bloomberg, I mean, they edit to me to make it so I don't write stupid stuff, but I have my own views and I express them way because my goal is to be right, not to help my firm sell something. And the idiot factor really hit an extreme age Q1, Q2, when I said, crude oil's up 130, it's going back to 50. It just always is. Now I'm looking less as an idiot, but I had to get to that point, and it's one of those things I really enjoy. It happened to me a lot in crypto sometimes. When they call you an idiot, they usually know you're right, you trigger something. And now we're getting back to the point with crude oil dropping to almost unchanged in the year. By the time this prints, it might be below. It's got a lot more to go, and that's just pointing out what happens in history with the world's most significant mean reverting commodity. But what's happened is energy prices spiked. The Federal Reserve and every central bank in the world followed that with inflation. Oh, we have to hike more, and now it's going to come back at the fastest pace, I think, in history, which means we're going to go into significant deflationary period. That's part of the unstoppable power of the dollar. So let's look at North American liquid fuel production. This is data from the Department of Energy versus consumption. Will be a surplus next year around 20%. That's just based on the ongoing trends, unless prices collapse to offset that production increasing versus consumption. And right now, the DXY relative to its 100-week moving average is 18% above that. It's only happened once in history, at the peak in 2015, right before the collapse. So it's pretty well extended. 100 weeks is pretty standard. It's almost 2 years. It's 2 years. But that's the relative strength of it. The thing is, DXY is measured virtually against the Europe. We all know Europe's basically a basket case. I mean, they don't have, I shouldn't say a basket case, but there's so many independent countries. I mean, I lived there. We all know why most of us Americans have emigrated from there, because of the wars and forever. But comparing to another, bigger baskets, like we have a Bloomberg index and the trade-weighted broad dollar, I see it's not nearly as much as it rallied as much into the peak in 1985. I remember that well. I was in France as a student. But this is what's breaking, and this is part of what the Fed ignores. And the number one way to make this stop happen is the U.S. stock market going down relative to the rest of the world. Yes, there's other things in the big picture, but that's been one of the key drivers over time, is the U.S. stock market outperforming the rest of the world. Now, yes, it might be a little bit lagging when people start taking their money out of U.S. assets, but where are they going to go? Honestly, okay, in the short term, even the bond market, it's a lesson I learned trading treasuries years ago. There's no bond market in the world that's even close to the U.S. Depth, security, volatility, getting 4% on a 2-year note right now. Thank you very much. I mean, what person in the world is not going to do that? So people only sell treasuries because they say, oh, they have to. And I look at it as this is part of breaking right now in this rest of the world. This is part of, to me, is going to be the Great Recession kicking in this year. I'm calling 2022 the Great Reversion, and I view this as very similar to 1929.